Happy Friday, everybody. Welcome to another 5 bullet point Friday of financial data and developments over the course of the week. Stat testing of a new trading strategy has been the primary focus for this week. I'll provide some more details on that soon. There's a few things that we've been working on, which we will be forwarding through to investors and interested parties over the next couple of weeks. Let's hop straight into it. China, they slashed their 1-year prime rate by 10 basis points. It was roughly in line with expectations, but essentially the PBOC now faces a very complicated balancing act of simultaneously stimulating their economy and trying to get some internal demand occurring, whilst trying to manage their inflation, but also trying to support and stabilize the yuan, which has been selling off and depreciating significantly lately. Second, US existing home sales fell to 4.07 million. It just has been a continuation of this US real estate industry as of late. The consumer over there is experiencing quite a large glut in inventory, but at the same time, there is obviously price inflation and historically high interest rates, which are impacting people being able to transact on these properties. Third point, German flash manufacturing PMI declined to 39.1. This has been some of the fastest declines since May 2020. Over the last 2 weeks, it has been somewhat stabilizing down at this 38, 39 level, but it shows a very big period of contraction. And one of the big things is that by there not really being a rebound from these really significantly contractionary states, it just reinforces that the perception that the downturn that they are seeing in Europe and in the German economy may be longer standing than initially thought. UK flash services PMI falls to 48.7. It's moved from an expansionary figure of 51.5 in July, and it has now, or in June, sorry, and it has now declined all the way down to 48.7, showing a contraction. Again, there's this very challenging situation in the UK economy, and pretty much it is consistent globally, where there is a lack of consumer sentiment, there's higher borrowing costs, and then inflation. So the balancing act from a lot of these central banks is trying to manage all of those three factors in the same time. US unemployment claims fall to 230,000. It just shows that the US labour market is continuing to stabilise. There has been seasonal weakness over the last few weeks. However, we are just still continuing to see that the labour market in the US is very solid, and we're not seeing a real spike up there as you would expect to see in a period of significant slowdown. So we just have to continually watch that data point. Here is a summary of the 1 week relative performance of a basket of futures markets. You can see that over the course of the week, soybean meal, silver, oats and soybeans, and coffee were all very good performance. Interesting to note that silver up about 6.5%, as well as gold being up about 1.5% over the course of the week. A lot of that was because when China came out with their stimulus of cutting their prime loan rate, people thought that that may result in further inflation, and then people buy up silver and gold as, you know, this type of inflation hedge, if you would like to call it that. The equity markets, US equity markets and global equity markets, have had a relatively topsy-turvy week. The DAX was down 0.8. The Dow Jones down about 1.5%, and especially after last night, where there was a lot of volatility in US equity markets after Nvidia posted their monstrous profit. VIX has been relatively stable over the course of the week, but outside of that, we generally haven't seen an awful lot of volatility or consistent volatility through from week to week or over the course of the week. Intraday and intra-week, there's been a lot of volatility, but from a week to week basis, there hasn't been an awful lot. Aussie equities have been swinging all over the place. There's been a real mixed bag here. BHP for the week down about 1.5%, Fortescue rebounding a little bit. CBA NAB had good weeks. Macquarie also, and one of the outstanding standouts was Goodman. GMG, they were up about 5% over the course of the week. We are seeing this continued rotation out of healthcare, CSL ResMed being the primary businesses there. Coles, after their report, down about 10% as well. For the trend barometer, you can see that we've gone from having a lot of positions within the futures fund universe have been trending and hitting new highs and new lows over short and medium long-term trends. However, more recently, that's really just dipped down, and that sort of reaffirms what we've seen up here with these futures markets, where on a week-to-week basis, there hasn't really been an awful lot going on. Outside of that, I hope everyone has a nice weekend, and speak again next week. See you then.